All right, everybody, we're ready to get this show on the road. It's the last panel of the day. All right. So, moderator, Mr. Moderator, hi, Lou, how are you?
I'm doing really well.
Man,
how are you doing?
How many countries have I seen you in so far?
At least 4 that we can talk about.
At least 4 that we can talk about.
Yes.
So Lou is obviously the APAC lead over at Solana Foundation. Hi, gentlemen, how are you? You guys having a good time? Oh, this is going to be a wonderful time. So, this panel, Lou, what is this panel going to be all about?
This panel is going to be the riveting topic of institutional finance meets DeFi.
Awesome, great. So, please, panelists, join the stage and give them a big round of applause.
Woo!
Last panel of the day, everybody.
Awesome. So, first of all, thanks everybody for hanging in there as the last panel of the day. Really appreciate everybody. So again, my name's Lou. I'm part of the Solana Foundation, and I'm really looking forward to this panel. So to begin, we'd love to have everybody maybe going from right to left, my right to your, I guess, your left. We can start to do a quick introduction about yourself and kind of the business you represent.
Great. Jason Urban with Galaxy Digital. I run the markets business there, and we basically touch everything from spot to on-chain and everything in between.
Hey, I'm Paul Kremsky from Cumberland. I run the business development team. Cumberland is a liquidity provider across all of crypto, whether it's our OTC desk, centralized exchange, liquidity provision, or on-chain as well.
This is Thomas Zhu. I run digital assets and the family office at a China Asset Management Company. We're one of the largest asset managers in Greater China. We've been working very closely with the Hong Kong government on issuing different type of tokenized assets. Happy to be here. Thank you.
So to begin the panel, I don't want to make this political, but I'm always curious, especially from the fact that you three kind of run different businesses, to understand relatively different businesses, to understand that kind of since Trump's victory in November, what's been like 1 or 2 events that has kind of changed the way you looked at how your team's going to position yourself for success for 2025? Yeah.
Really picking the third rail here. I think that, a couple of the events, obviously the launch of the Trump coin was something that caught us all a little bit by surprise. I think that depending on how you want to think about it, it could be very positive for the backdrop of what we're doing, or it could definitely create a different overhang or a different element. So that's one, and we've thought about how is that going to change the regulatory landscape? What does that mean about the rules that we've all been operating by for the last 4 to 8 years? How should we think about the next 4, and what do we need to do differently?
Yeah, to how we're positioning our business, it actually doesn't change meaningfully, but we get a lot more excited. And what I mean by that is we've always made these efforts to be as regulatory compliant as possible, even when the regulations weren't necessarily clear, right? And so we actually don't foresee ourselves having to change anything about what we're doing. It's just, it opens up a much larger partner space. We were having this conversation before. We've been having conversations with banks for the past 5 or 6 years. And frankly, they're not always the most productive conversations because it's really hard for these banks to get comfortable in moving into digital assets. And frankly, it felt like a waste of time very often to kind of take these calls and prepare for them and dive deep into it. We don't feel that way right now. Now it feels like all of these organizations and these institutions with capital I, much more so than ourselves, these institutions really are coming into the space and they're trying to find the right partners to do it. And so our ethos for the past, decade has been be prepared for the day when the entities are coming in a meaningful way. And whether that's an asset manager, a ETF issuer, banks, whoever it is, just be ready so you don't have to get ready.
Yeah, I think this is a good question that I'm in this competition every day. Last year, when the Wall Street, BlackRock, etc., launched the Bitcoin spot ETF, we caught up quickly. Right now, we're the largest Bitcoin and Ethereum ETF issuer in Asia. We launched that in April last year. Right after our launch, the US approved the Ethereum spot ETF. So I think the competition is always going to be there. The question is whether the regulatory compliance framework is ready or not. What I found, Hong Kong, Singapore are pretty pioneer in the regulation framework. For example, in Hong Kong, we're in the process of launching the Stablecoin Act, while in the US, we just started the discussion between the Senate and also different state. So I think because of the size of the market is much smaller in Hong Kong, so we're able to be more nimble in terms of what we can do. And we are used to sandbox environment. So you saw that in Singapore, there's a Project Guardian sandbox that has been lasting for last 3 to 5 years. And in Hong Kong, we have Ensemble, we have Hong Kong Dollar Plus, we have stablecoin, etc. So those sandboxes provided opportunities for industry participants to test the market first and to guide the regulators to come up with a more commercial regulatory framework. So I'm in this kind of education to the market, education to the policymakers process. What I found is the regulators are more open in Hong Kong, and obviously there's a shift after Trump's election. I look forward to see the states catching up in the regulation framework.
That's great. A kind of follow-up to that is that, so I'm based in Asia, and kind of what I've seen recently, especially on the different sandboxes throughout my travels, is that for the past couple of years, as you mentioned, a lot of the different participants have been really testing the regulatory framework, testing the technology. First, it started with like a permission environment, and then they maybe moved on to Ethereum and kind of did that type of testing. What I've noticed is that right now, more and more the participants they're more focused on kind of going to product, going to commercialization, right? And how are you seeing from, even from different jurisdictions on the regulatory side, the conversations your teams are having, like how open are they to kind of like you said, opening up a little bit and letting these different teams from not just stablecoins, but even tokenization, FX and stuff like that to kind of proliferate outside of these sandboxes? Yeah, go for it.
I would say that what we've seen in the last 2 months has been very encouraging. And it's encouraging on a number of levels, both, it's a little bit of a top-down and a bottoms-up. So whether you're talking about, say, a regulator like the CFTC putting together a pilot program to say we'll take crypto as collateral, as a collateral object inside of FCMs and an exchange framework. That's really powerful because that is what needs to happen from a plumbing perspective. Regardless, why does PayFi matter so much? Because it's easy to start with a stable, but if they're even open to having a conversation about, hey, I can take Bitcoin or I can take ETH or I can take Sol as collateral in whatever trading you're doing, I think that launches us forward when we think about everything with a QSIP ending up on a blockchain, because that's really what has to happen for the thing that I think we all got in the industry for to really take place. And so we're seeing open conversations on that, where before people didn't want to engage at all in that. And that's in the US, which has been, way behind what I would say we've seen in Hong Kong, Singapore, even little pockets in Europe. So.
Yeah, just to kind of jump on, you mentioned PayFi, and to really get this thing going and to have it be more interesting, crypto needs to be something other than infrastructure for people to trade crypto. That's why PayFi is so interesting and has occupied so much of my time, of your time. How many stablecoin chats have we had together? But a real consumer application is one where instead of having an octopus card, I can get on the train or get into Grab or whatever and pay with stablecoins, right? The majority of the world is not going to care, frankly, about the price of Bitcoin, ETH, or Solana, right? And I think, stablecoins have done a really nice job of enabling people to trade crypto assets more efficiently. I've been doing this long enough that I remember trading crypto before stablecoins were a thing and like moving a wire from Gemini to Bitstamp and like, okay, there's an ARB here. Let's see if it's there tomorrow. But I think that stablecoins offer the opportunity to move digital assets outside of like a thing to be really good at trading crypto. And I don't think the job will really be done until that's possible on a payment standpoint, right? And part one of that is I can go to Starbucks, I can pay for a coffee, and I can give them USDC, or if I'm in Hong Kong, I can give them HKDR. That's step one, right? But on step one, they're probably taking that on the back end and they're probably converting it into US dollars or Hong Kong dollars. Step two, and the one that I'm really excited about, is where, Starbucks or whichever, little local coffee shop says, okay, you gave me a stablecoin. I'm done. Thank you. That's good enough for me. It's money. I accept it as money. And that'll be a really kind of exciting mentality shift.
Yeah. From an institutional perspective, I had a chat with Mike Novogratz in Abu Dhabi in December about how institutional going to play in this role. We have to think about that in a global perspective. For Galaxy, you have a global footprint. You're regulated in the States. You're operating in many countries. I think that business model could not happen with a lower cost in the past. And because of the blockchain technology, we're able to operate a global business with instant liquidity and efficiency. So for us, last week, we just got approved to launch the first retail tokenized fund in Asia after 14 months hard work. We've been educating the regulators on what is a STO, a tokenized asset, what is the RWA, and how we manage the different public chains, what chains we choose, how can we accept different type of money. For example, right now it's a fiat subscription. Later on, we'll open up to the tokenized bank deposit from the commercial banks, and then eventually go into the stablecoin subscription and redemption. So many of those opportunities globally has been moving forward because of the institutional adoption. And as the largest asset managers in Asia, and particularly in Greater China, we really believe the larger institutions need to take the responsibilities to help move the market and to advise the industry. So besides the STO, the tokenized fund we launched, we're also working very closely with commercial banks. As Paul just mentioned, before the banks, maybe 5 years ago, they are not against crypto. They are just not open for discussion. Right now, because of this product we launched, we've been working very closely with HKMA and with the local banks for them to be able to custodize the tokenized fund, license the stablecoin. And I don't think Hong Kong is early in that. If you look at Abu Dhabi and Luxembourg, because of the MiCA, the regulation, more banks in European areas are allowing cryptos, licensed cryptos, and license the crypto operators. So I think Hong Kong is catching up in that custody area. And with a bank grade and a bank type of trusted custody solution, I think institutions are more comfortable of launching products, and institutional investors will be able to move larger AUM into this space. I think the adoption from Cassie Wood's projection of Bitcoin, whether it's 5 million or 7 million US dollars per coin, that comes from the mass adoption and the institutional migration into the crypto. I think we are starting to see that infrastructure has been building more quickly and catching up. I think that is very optimistic.
That's a great answer. I think there's two ways we can take this conversation. One way is kind of stay around the stablecoin side a little bit from demand generation. And the other way we could take it is kind of from Tom's point of view, which is like investors who are actually trying to access, and actually traditional investors are trying to access this asset class. So we can start with the stablecoin side and we'll kind of move into that side. So Rags, who's a co-founder of CAS, was giving a talk earlier, and he kind of had one slide that says that stablecoin penetration today is about 1% of total money supply globally. And he's targeting around 10% in terms of, that's like kind of the tipping point for him, where it finds like mainstream adoption. This is a really short question, but this is really what I'm curious about. So I don't really care, but so I'm curious, from your perspective, like how do you guys gauge what success looks like potentially from a stablecoin perspective? Is it a metric? Is it what are the catalysts and what are the variables you guys are observing? Yeah.
So I think one of the things from where I sit, my perspective, is it's not just size, because you can somebody can monetize their treasury. BlackRock can go out and do that, and does that mean that stable is successful? Not really, right? I think that it's maybe wallet, number of wallets is a great metric. I think that if you think about institutional adoption, how many of these financial institutions that were allergic to crypto not that long ago who are now having these conversations? I mean, you guys are obviously at the forefront, but there are a number that, these stodgy old institutions, which all of a sudden our phones are ringing. I know your phones are ringing, and people want to launch these things. They want to do it, and they don't. It's interesting having been in crypto for a while now. You're constantly evangelizing or you're educating. It's a little bit of all of that, but the evangelization is not a thing anymore. Now it's purely education. Like, okay, you've bought into the story, you understand the narrative, and so how do you measure success? How many of those people are actually doing it? When you start to see them, hey, I'm going to tokenize a money market fund. I want to, get stables spread through all my clients and all my deposit bases.
Yeah, I mean, speaking of tokenized money funds, stablecoins aren't just one thing, right? Typically, when we talk about stablecoins, we talk about USDC, we talk about USDT, and those are basically, asset-backed stablecoins, right? There's a dollar in, stablecoin out. But there's actually this really wide spectrum of stablecoins, this really kind of wide spectrum of different products, right? You've got algorithmic stablecoins, which we don't really talk about anymore, but they were a thing. They may be a thing again someday. You have asset-backed stablecoins like MakerDAO, like Mento, where you put an ETH in and you can mint against it. Then you have asset-backed stablecoins, USDC, USDT, ZUSD, because I see Rami there in the front row. Got to give him some love. And then you've also got products like tokenized money funds, which are yield-bearing products. They're not strictly speaking stable coins, but they behave a lot like them. And then we're going to have more products as well, right? CBDCs are going to come at some point. But before that, I think that we'll also see something like tokenized bank deposits, right? Which makes all the sense in the world. And we're sitting here in Hong Kong, and the money in our pockets right now has the name of a private institution. So I think Hong Kong will be one of the earlier jurisdictions to actually accept, private money or tokenized bank deposits as, okay, I understand what this is, because we're all used to it.
Yeah, I think what Paul just discussed is the topic I spent 3 hours last Friday in Beijing speaking to the monetary authorities. What is stablecoin? What's the definition? What's the format? Is that a state backed, or is that a private issued backed by assets, whether it's gold or US dollar or RMB or Hong Kong dollar? The definition of stablecoin is not yet being confirmed. That's based on one of the largest the central banks, their perspective. And from right now, what we saw, the stablecoin is a payment method. Even though it's a product, but it's a payment method for you to transfer the money. But when you need to off-ramp that, you're still going to be in this monetary system, right? You're not bypassing any of the existing systems. That's number one. Number two, the matrix of Lou's question. TVL is something the Web3 world really chasing, right? There's a TVL war everywhere for any protocols. But my perspective is whether this money is valid or sustainable comes from two matrix. Number one is the velocity, how often and the circulation of this intermediary currency or intermediary product. So there are, from my study, there are about 200 stablecoins out there. Less than 3% are licensed, regulated. Out of that 97%, the velocity of the circulation is quite low. So if there's a new startup wants to issue a stable coin, I think that's something you need to think about, whether to spend at a Starbucks or to buy a Cathay ticket or transfer between Philippines and Hong Kong. So there are use cases that help you to increase the velocity, number one. Number two is the trustworthiness of this product. If you look at Tether's website, they publish their quarterly treasury management portfolio. Right now, it's only 85% for cash equivalent, short-term T-bills, etc. There are 15% of that is not stable. It's Bitcoin, it's some corporate bond, etc. So for you to issue a stable coin, you have to bring the trust to the users. That's why the institutions, the bigger players, and the traditional payment companies will be comfortable using your stable coin. So I think those two metrics are important.
Yeah, agreed. I think that makes. I think the different variation derivatives of what a stablecoin can be obviously complicates it, but also opens up kind of the field to different use cases as well, right? Because it's so flexible. At the end of the day, it's code based, right? So you can kind of adjust to what you need, which kind of leads me to the next question. So let's assume that kind of the generic USDC stablecoin continues to grow, which it will, USDT, whatever it may be. What are some specific use cases that your team is kind of monitoring right now that doesn't exist or hasn't really hit product market fit today that across your businesses that you could be interested in getting into that you're allowed to share? Yeah.
The allowed to share is always tough because we tend to be a little more secretive about some of the things we're doing. But as I think through like things that haven't necessarily succeeded, we're just starting to see the success of yield-bearing stables and interest-bearing stables. I think that's something that, because of at least from the U.S. perspective, from the U.S. regulatory regime, those things are securities, and they would fall under an SEC framework, right? And so they haven't had a chance to really grow because it's all permissioned wallets, and for that to really succeed, everyone here owns their money, right? And they can choose to do what they want with it and invest it how they want and get instant liquidity, however you want to think about that. And so with yield-bearing or interest-bearing stables, that's something that I think we're going to have to see a different framework or a different classification, which will allow those to get into the hands of the general public, to where it isn't an us and them, or it isn't the whole system that we look to. Part of the democratization of finance is crypto. And if all of a sudden it's like, well, these 30 guys have permissioned wallets so they can get interest, but all you other people can go pound sand, that doesn't meet with the ethos of what we're all trying to do here. So I think that's one area where we'd love to see, some more adoption.
Yeah, you always have to be careful when you get consensus on a panel like this, but I have the same answer. Tokenized money funds for me is something that we've been talking about for a while. We published a paper on it a little over a year ago, which is already hilariously out of date, which just shows you how fast the space is moving. But you look at tokenized money funds, or yield-bearing stables, but they're really a different thing. They're a great product because, unlike a non-yield-bearing stablecoin, obviously, you're getting interest on it. But there is also a lot of shortcomings because of what Jason just said, right? It doesn't make a lot of sense to have that be the base pair when you're trading crypto, because the price basically accumulates over time or whatever, and because of the fact that it's potentially deemed a security in the U.S. But it is, in many ways, it is going to be a better product, right? Why would you give up that yield to someone else? Why should that margin for the issuer be 100%? It should be 25 basis points, something like that. So there was this world where you kind of wonder, like, okay, how is this going to look? Are these going to be competitive products? Are they going to be symbiotic? I'm sure many of you saw recently Circle acquired Hashnote. And to me, that is a pretty big landmark development, because it actually shows that stablecoin issuers are looking at this and saying, like, okay, this is a product which is potentially going to compete with ours. Let's bring it in-house, right? And what I think we're going to see is we're going to start to see these bridges getting built between the two types of products, right? Because really from a consumer standpoint, what I want to do is I want to, whenever I have funds idle and I'm just sitting in dollars or whatever my currency is, I want to receive yield on it, right? I don't want to sit in a stablecoin where I'm not receiving yield. And then the minute that I want to go trade crypto or the minute that I want to move funds on chain, I want to swap it from the tokenized money fund into a stablecoin and then use that stablecoin to buy the thing that I want to buy, right? And I want to make that as frictionless as possible so that I don't have to do it the day before. I don't have to do it 2 days before. I can do it the block before, right? And it can all be automated and the throughput can go all the way through. And I think that's really where the market is going. And I think that acquisition kind of points in that direction. But that's what we're really excited about, especially when it comes to collateral, right? If we're sitting there with, millions or tens of millions of dollars on platforms as collateral, if I'm not getting my 4.25%, that's a big problem, right? And so enabling products like, Hashnotes USYC as collateral at the venues or with the counterparties that, our trading firm and many of your firms as well are using as collateral, I think is going to be something that's really important to see more adoption there from the exchange side, from the OTC desk side as well.
I think both Jason and Paul pointed out the reason behind why we issue the retail tokenized money market fund is because we believe the yield has to go back to the owners, right? Instead of letting the Tether and the world make 10, 15 billion US dollars every year on your own money or your own asset. And the process of that is pretty hard, is because different countries have different securities laws. And you need the licensed distributors to face the retail group. However, I think right now there are a lot of virtual asset uplifted licenses globally. I think that infrastructure can be built. If someone can connect all the different dots globally, they will be able to create a global distribution network for such product. So we're actually working with a lot of potential distributors for our product because we see the potentials of the product not to compete with stablecoin, is to provide the not transaction-based stablecoin users, but more the asset or value preservation or savings type of users to use the tokenized money market fund as a way for them to earn interest. So I think that is coming up very, very soon. And also we're working with different market makers to provide the liquidity for our tokenized money market fund. So the holders and the stablecoin issuers do not need to redeem that going through the traditional process and be able to enjoy the liquidity on chain.
Yeah, absolutely. I think from our perspective too, obviously, again, yeah, we're all in agreement here. But another way to frame it is that today, our investment, the way that we invest, especially I'm American as well, but the way we invest, the rails between how we invest, the brokerages versus how we actually make payments is just completely separate, right? It's like, what does the world look like once we can actually combine those two realms, right? And I know we have a little bit of time left, but happy to make this the last question, and then we can go grab some drinks. Yeah, so I agree with you on the stablecoin stuff. I agree with you kind of on the yield-bearing side. What's next? So let's say all that happens, you kind of get some more and more adoption on the stablecoin side in terms of whatever the derivatives could be, right? You bring on the yield-bearing tokens, whether it's a security, let's say it gets approved for different use cases. I'm just thinking, and I'm sure the audience will also be curious as well, because some of them are trying to build their future, right? In that world where the yield-bearing tokens are proliferating, you can kind of swap in and out. What are some other use cases that can be built on top of that would be interesting to y'all?
I mean, there's a lot of directions you can go. I mean, I think the easy answer is RWAs, going, the next level. But I truly think that there's a pathway finally, globally, for everything that has a QSIP, every asset that we trade to end up on a blockchain, right? And the first step is the PayFi layer, right? Because you have to build that infra, downstream. I mean, the the story that we've all been living with for the last 7, 10 years, whatever you want to call it, is it's going to come. And I think we're finally starting to see that, and that will open up those doors, and that's what's going to be exciting. But we need to get more institutions, more large institutions, to build the downstream. Like how do you settle a crypto transaction? If you're a Goldman Sachs, they don't have that framework in place yet. Someday they will, and so we need to get it to where it's there, so that now it becomes easy to take anything we want and put it on a blockchain, because it's so much more powerful.
I'm going to go back to stables again because it's kind of who I am. But I think non-dollar stable coins. And is Rag still in the room? He's gone yet? Okay, good. Because he always calls me out on this one because he and I disagree. But I think we're going to see non-dollar stables, occupy more than what they currently occupy, which is about a little bit under 1% of the entire market. And I think part of the reason why I feel pretty comfortable in that projection is right now stable coins are mostly used for buying and selling crypto. And for giving people who don't have access to the dollar, right? And those two use cases, it's like, yeah, I want a dollar stablecoin, right? If all I'm trying to do is trade Bitcoin, ETH, and Sol, I want it all to be in USDC and USDT. I don't want to fragment liquidity across different currencies. And if I want access to the dollar, obviously it's going to be a dollar stablecoin. But as PayFi starts to actually be a thing, right? Again, we're here in Hong Kong. If I'm going to pay for something, it's going to be with a Hong Kong dollar stablecoin. I live in Singapore. If I pay for something, it's going to be with XSGD or something similar. And other use cases, FX on chain, right? If I'm coming here. I came here this morning from Singapore. I got off and then I went to an HSBC terminal and I crossed a 3% spread to get some Hong Kong dollars, right? If I could do that on Curve or on Uniswap and pay 25 basis points or 12 basis points or whatever it ends up being, like that is a lot better, right? So I think that as we see more use cases for this stuff, it's going to move it away from this extreme dollar dominance. I still think dollars will be dominant, but I see them being as like 70% dominance, not 99% dominant.
So I don't like the disruption in this world, but we are reinventing the traditional finance. And I think from the custody to the FX to the offering, issuing, and asset management and payment, all of those traditional finance sectors will be reinvented because of the blockchain technology. And after all, I think we're going to create a digital world with identities. And all of those data that processed through payment, through investment, will be able to give you a profile of a digital identity. So my personal belief that in 5 to 10 years, everyone gonna have their own unique personal identity that is associated with your online and on-chain transactions. And the AI agent will be able to understand your behaviors and help you to make a lot of decisions. So I think the combination between the Web3 and the AI will be finally can come together because of the financial infrastructure development.
That's a great answer. Also, I made a bet with a friend that AI was going to come up in this panel, so I just won $100. Thank you very much.
You almost lost.
I want to split of that.
All right, that was the last question. Thank you very much.
I was gonna say, was that what you were whispering about?
Thanks, guys.
That was awesome. That was fun.